Hello traders, it's Samurai Trader here. Welcome to this session. I'm going to be running through 5 trades for 5 wins. 4 of them were on the NQ and 1 was on the RTY. I don't think a day goes past where I don't receive an email from a member of the public or a potential trader or even an existing trader asking me questions about the NQ. Now the NQ, I have 2 nicknames for it. I either call it the Nifty Naz or the Nasty Naz because it can be either. So I'll be explaining some of that, and we'll go back and review 5 trades. I'll play the trades back. Now the session you're about to watch was actually and I've turned the auditory part off at the audio, was a training session I did for my members. However, I'll be giving you a commentary, a running commentary, as I explain some of the setups, and I'll fast forward some of it so we're not sitting here for 45 minutes or so just watching a couple of the setups. So let's get into this. So traders, you do know that there's a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable. You can do this, traders. You can learn how to master the art of day trading. It's not rocket science, but what you've got to be willing to do is develop the discipline, the patience, and wait for the setups to come to you. Now if you're a brand new trader or a potential trader watching this video, some of the terminology I may use may be brand new to you. The charts may appear to be a little confusing. You may have no idea what's going on, but it also isn't rocket science. Now my job's to break it down, so in under 30 minutes I'm trying to condense a whole lot of information into this video. So don't feel overwhelmed, because you can pick this up. You'll have what I call aha moments. Number 1, and I know I bring this up in every video, because you show me a man or woman with a compelling future and I'll show you a man or woman that's almost certainly going to make it as a scalper and day trader. What would it mean to you to net $500, $1,000, $2,000 a day? It would be life-changing for most of the population. This is the reality of day trading. Now you can do this. Now it's all about having realistic targets and goals. If you want to be super conservative, you trade 10 contracts, go for $100 each, a day each. That's $1,000 a day. Or go for 200. As you'll see, I'm going for 300 on the NQ. Now unfortunately, so many traders are targeting $500, $1,000, but even worse than that, they're not following the money management rules, which I want to cover with you in a moment. You know what, a lot of traders will switch off now. They don't want to hear this, and they wonder why they keep struggling as day traders. Now what's your edge, or what's my edge? Now an edge is that there's a higher probability of one thing happening over another, a greater probability of, say, over 20 trades. Any one trade is random. Anything can happen. But what we're looking for is trading strategies that are pattern based, that repeat day in, day out. And those patterns are very easy to identify if you look at it this way. Think of a market as an ocean. The dark blue line here is the higher time frame. It's the tide, and we get these little waves going in a direction. Now here we'll have then our counter trend trades, and I think in this video you'll probably see me take a couple. Brand new traders, we got to remember the Goldilocks rule. Not too easy, not too hard, just right. And what I found is, for new traders, you want to trade in the direction of the trend. Eventually, and you'll see me take some counter trend trades, but eventually you start trading CT trades as well, but trade with the trend initially. Now I mentioned that most of the trades here taken, 4 out of the 5 are on the NQ. If you're not familiar with the Nasdaq, it's $20 a point or $5 a tick, so it moves in $5 increments. Now the great thing is you can trade the micro contract. The micro contract is only 10% of the value of the big contract, and in fact, as you're about to see, the micro trading on the NQ is larger than any other market, and I'll show you this right now. So This is typically your typical volume. Actually this is a bit higher on this day. Normally on the ES, for an example, you'll have around 1.5 1.6 million contracts. So this is just a random screenshot. Here on this particular day it was 2.5. If we look up here on the NQ, we've got 852,000 contracts, but we look down here at the micro and basically it's more than double than that. Now you go and look at the micro gold or the MES or the M2K, which is the micro on the Russell. You will find traders that and on the micro CL, that no other micro comes anywhere near the volume of the micro NQ, but also it's double the volume of the average NQ day. And the reason for that is you've got a great deal of volatility in the NQ, which generally means, and I'll show you this on the chart exactly what I mean, you need a larger stop loss. So what you'll have is a lot more traders trading the NQ because it allows them to trade that much higher time frame without having massive risk. Let me show you what I mean. This here is something that I train traders on when it comes to risk management. Over here you can see the intraday margins, and so sometimes they're 500, sometimes they're 750, but overall here's what a broker will say to you. They'll say to you, look, there's no need to have where is it here, let's just take this one here, 6,500 in your account, your intraday margins are only $1,000. But what if you do have a 26 tick stop loss? Now that's $130. So you go and have a loss, you just lost 13% of your capital. So what is very important is money management. Okay, so over here we look at what we need, and say if you look at the New York hours, it's not uncommon to need a 16 tick up to a 20 tick stop loss, whether you're trading tick charts, Renko, range, it doesn't matter. If you're going to go for placing your stop loss, and I'll show you in a moment on the charts, and then we'll look at the recording, under or above a swing, you're going to have a large stop loss. Okay, so you can see there 130, 180, 250, where if you go and trade the micro, even though proportionally the micro commissions are a lot more, but you've only got $25 exposure compared to 250. So what you'll do, you'll have a lot of traders say trading 5 micros instead of one big contract, half the amount, half the risk. Now this may seem a little confusing right now. After a 30-minute or 1 hour training session watching my videos, my training videos, if you remember, for an example, you'll pick this up in no time. But this is a business of capital preservation, traders. So if we look at this here, so this is actually on the Russell, and you'll see this on the recording, video recording in a moment. This is what we call a 2-tick Renko. Now you can trade with any type of chart you like, but Renko really smooths out the price action. Now yes, I know you can lose some information that you'll pick up on tick charts. However, for the type of trading, pattern-based trading, it makes it so much easier to identify patterns when it comes to day trading. Now if I take a trade, say if I'd have gone long here, I'd like to have my stop loss 1 tick below here. As you'll see on the recording, I went short here. This is what we call a T3, and I had my stop loss 1 tick above. If I'd have gone long there, 1 tick below. Now when you're trading a much higher time frame or a larger candle size, to go and put your stop above or below a swing, which is sort of generally what I'm going to recommend, there are some exceptions to the rule, you're going to have that larger stop loss. Now if we then look at, this is the NQ. Now the time I recorded this is midnight Central Standard Time. Now the markets reopen at 5 p.m. Central Standard Time. They close for now 4 p.m. Central Standard, reopen. So the futures markets are basically trading 23 hours a day. So this is around 4-5 p.m. my time, so it just really suits me to the ground, down to the ground. Now this is a 6-tick Renko. Now if you're trading a 6 tick, you need an account size of between $5,000 and $6,000. so therefore the recommended target I have is between $250 and $300 per contract. Depends on capital allocation. I won't get into all that now. Just a simple thing I do that works really well. So in taking a trade here, your stop would be below, taking us up there, and here I wasn't in this trade. I should have been, woulda, coulda, shoulda, would have been in that trade, or should have, let me rephrase that, just there. And I took a little scalp. This is, and I'll explain that when we get to it. That's called a pivot magnet trade. Took a nice little short there again, okay, and we had some great divergence. Now if you're a brand new trader initially, these are the trades here to be taking, and maybe the pivot magnet trade, and that you could call, and I know a lot of members are watching this as well would know that's a pivot magnet as well. They're a good 85-90% trade, very rules based, so there's some specific rules have to be met, but they're very high probability. Now with that being said, okay, all of that looks great margins, etc. This is where, okay, well look, I don't have $6,000, and I know a lot of you don't. Now what if you do though? I've got a lot of very wealthy members and traders. I still recommend you start on the micro, but you've got to have targets. Trading is a business, and as Stephen Covey said, rule number 2 was begin with the end in mind. Now let's just say if you do have 6,000, or even if you only have 600, okay, let's cater for both right now. By starting off on a micro, we can see here if you average just $30 a day, and I'll show you how to do that when we get to recording, by 12 weeks you've got an income there of 14, and I've got to say legally potentially, okay, potentially you've got $1,400 a week, which a lot of traders would be very happy with that as an additional part-time income, and your capital's now growing to nearly $7,000. Now at this stage we can now roll over to the big contract. Now just if you're brand new to watching my videos, you only start trading an additional contract when you double your money. Okay, so you're using the market's money. You may decide if you've got the capital by week 4 or 5, okay, I'm ready now to jump up to the big contract. I'll now put some of my own capital in, and we can see potentially there by week 11 you're on your $10,000-$12,000 a week. Your capital's at $54,000. This is the reality. What ruins or lets a trader down, why is it that only 5% of traders actually make money, is they're overcapitalized or undercapitalized, really I should say, pardon me. They don't follow the rules, they get impatient, they take impulse trades, they trade divergence right from the outset when you should be sticking with the trend. The patterns are the patterns, they're geometric, they appear multiple times every day. So, and I'll explain it when we get to this recording in a moment. So you can see the massive potential here. You can be working, have a full-time job, and get home and do 2 or 3 hours of trading. Most of my trading is wrapped up within 30 minutes to maybe 90 minutes at the very outset. So let's just say here, if you don't have a lot of capital, but you say, okay, this looks really interesting, you can start with a $600 account, target your $30 a day. In 12 weeks you've now got your 7,000 nearly. You can now switch over where you, and by the way, you can do this with 5,000. I'm being generous here, okay. I'm allowing for a larger stop loss, what we call a 24 tick. You can get away with a 20 tick stop loss, and I won't get into all of that now. However, let me tell you, it pays you to be conservative when it comes to trading. Now we're after 300 a day, and look where you are in 11 weeks. Now that's taking you potentially 23 weeks. Then maybe add 7 weeks of sim trading, of doing your training. So in 30 weeks you're financially free for life, potentially. This is the true potential. So I scratch my head because traders say, oh, your money management rules stink and whatever. They just can't handle the truth, and they wonder why they're not making money. Now if trading hasn't been kind to you up till now, let's draw a line in the sand and let's restart your career. Okay, let's say, okay, I've blown maybe my capital up till now. I'll start on the simulator and I'll basically retrain my mind. You see, what happens is you develop muscle memory, the bad habits. We've got to get rid of those. All right, now as we go to the recording, these are the critical areas that all plot automatically, but these are all money makers. They plot automatically on your charts, but they all act as support resistance areas. Now with this recording you've got here, as I mentioned, this was actually, I've just turned the sound off here. This is a training session of some live trades I did for my members. So some of the things I won't be running through, and it also goes for over half an hour. I'll just be fairly quick on, and I'll fast forward some of it just here. So let's run through. First of all, we can see here on the cyan, that's an 89 EMA. You can see quite clearly I'm in an uptrend. Okay, you had potential trades here and here, here and here. Now each one of these steps, see how they look like steps? Each one of those steps on the big contract is worth $15. Okay, so each one is worth $15, and it's worth $1.50 on the micro contract. So what we're effectively after commissions to net $300 a day, I'm after 20 steps a day. That's all I need per contract, is 20 of these, whether I'm scalping or going for a slightly larger target. Now as far as targets go, and I'll talk about this setup in a moment, this is basically a pivot magnet trade. But I was going to say then about targets. I'm a scalper. I'll usually get in and out. When I will increase my target is if, say, so I'm usually after, by the way, between 22 and 24 ticks. Sometimes though I will go for a larger target if I've got a major area support or resistance in front of me. Likewise, even here, I'm just pointing out there that this is a pivot right there. Now I'm ready to go to break even. Okay, and as you can see there, and I'll just move that off there and we'll just let this run for a moment. I'm sort of thinking, okay, what do I do here? Do I get up there and take some profit? Because you can see my target in green is well above the pivot, and quite often a very high percentage of the time we'll find resistance at these pivots. And so that's where I like to either scalp into those and take partial profits, or to cover to exit the trade. Now just there I've switched over and quickly looking at, so I've got multiple screens, so I'm looking at, I'm just here so you could see it there. I switched over to the RTY, another market where I've got a potential setup. Now I've gone to break even and I'm still unsure about this. Okay, do I just scalp? Do I go for a larger target? Now what you don't see here, I'm also looking at a chart called the anchor chart, which is a higher time frame. So that higher time frame is giving me some additional information that you can't see just here. Now I'm going to move this along a wee bit here. So finally we get up there and we get filled. Now on this RTY trade, why did I take this? See how price action is very, very solid. Now in this case each step is worth $5. That's all. However, I'm trading 8 lots, and this is what I call a T3. In fact, for members watching, it may not look so much like a T3, but I had a T3. If you watch a recording, the training recording, on both the anchor chart 1 and anchor chart 2. So on the higher time frames, it was telling me, hey, you've got major angulation. Major angulation is when price angles strongly away from your EMAs, and it's, imagine an elastic band being pulled back. It wants to snap back. Now I do spend some time explaining this to members. I'll just move this along a wee bit because we chop around for a little while. And what I've now done, we're back to the NQ. I've now just shorted, so I'm just checking this one here on the RTY back there. So I'm juggling a couple of trades here, which, by the way, new members, don't do this. Don't trade two markets at once unless it's very slow. A bird in the hand's worth is better than two in the bush. So just here, what I'm looking at is, I don't know if you can see my circle there, but now see why I've pulled back to the pivot just there, and I'm now pulling my target down slightly back down to the 89 EMA. Why? We bounce off that 89 every single day, quite often multiple times. Now I'm bringing my stop down, so I'm locking in more profit. So if I do bounce here, I've at least, if either I get filled, I hit my target, or I get bounced out, but I still lock in a nice little profit. See there? So just there, the red. So I've got that little I've got that margin in between. Now one thing with the RTY at that time of day around midnight, it's quite thinly traded. You can't really trade without getting substantial slippage, sort of any more than 10-15 contracts at once. And you can see there I just got stopped out with a nice little profit just there. And let me move this along. Okay, so here with this double top here, so let me talk about this one here. I've got a nice little double top. I had some divergence. For members watching, it was also a T10. We've now pulled back down, and I'm not sure why I didn't go long there, but that was a perfect trade to go. That's right, I remember I was looking at the other market. So that's what I mean, you can miss out on some great trades trying to trade too many things. So just there we had another potential setup there into the pivot. So we had a long trade, we had a beautiful little double top here with divergence, and it was a T10. Let me just move that along. We've already discussed that trade there. Now down here, see how I'm scrolling down just there. Let me go back and explain that, what I was doing. When I scroll down like that, what I'm looking for is what's in front of the trade. Where are my support resistance levels? Because we love to go up there and kiss these levels. Now we don't go straight up, we what we call stair step our way up. So we want to keep an eye on those, because also if we go long, say up the top, and we don't know there's a pivot straight above, you can enter a trade and then bounce straight off it. So you want to know, like say if we have one just above there, you want to know you've got a pivot there. So because you could get what we call a pivot bounce there. Okay, I just want to move this along. Video's now 23 minutes here. Now what I've taken here, this is a little trade I've taken, is what we call a pivot magnet trade. Now this is where you have to be careful of pivot magnet trades. I want you to notice just above, my target is just above the pivot. So those little blue dots is a pivot. There's a concept that's called front running, where you'll have a lot of traders will front run, and that is they'll put orders just below the pivot to exit their trade. And if I remember correctly, we rallied up there and the front runners jumped in. See that just there, how we've got a red candle. Okay, so my target is still up there. I still had confidence in the trade, but I would have been getting a wee bit worried. Okay, and you can see there we've just missed that pivot, but I do have a nice strong uptrend still. See the blue cloud? That's telling me I've got a nice strong uptrend. So now we go along here, and I decided to exit that trade. So I only picked up about a point out of that. Actually that was only 3 ticks, so I only picked up 3 ticks thereabouts out of that. Decided to exit because of that, but still 3 ticks is $15 a contract, covers your commission, little bit of profit. It's better than a poke in the eye of the blunt stick. And look what happens. Sorry, that's not quite true. That was the bounce there. Now I'm shorting the market. Now why am I going short just here? What you can't see is that on the higher time frame I had major divergence. See this here also? This is what we call divergence just there. So we've got some major divergence. Now by the way, I don't know if you can see just how clean Renko charts are, and once you've got a tradable pattern, you understand these patterns, and we just got filled right at the pivot. Now and I can't remember, but we could push straight through. Once again, I like to get in, get out, get paid. Now let's just scroll along here. I'm just probably talking there a bit about that potential bounce just there, and look at this here. Now just before we finish this video, for members watching, this is a potential T3 setting up, and as soon as I get a third, there it is, there's a T3. Traders, a T3 is a very rules-based trade. We see it set up on every market, or actually just about every market, multiple times a day, 2 or 3 4 times a day, depends on the time frame that you're trading. It's a reversion to the mean setup. You've got to follow the rules on it. They're very mechanical, they're black and white, and will usually get up as a minimum up in this zone. Okay, so it's just a black and white. In fact, see the 89 EMA will usually get up to there and probably even bounce off there. This is just fairly typical. Now I'd already hit my target for the day, and I know traders and even my members say, oh, you could have got another 10 after that. Yep, I could have, but I like to get in, hit my target. That sort of suits my style of trading. So traders, what I've covered is a great deal of information. This is not rocket science. It's about learning the patterns and the trading rules. It's about learning which are the right time frames to be trading and when should I be trading those time frames. So these are all rules that you can learn. Now there's more information about my programs in the description links below, but why don't you let me save you both time and money? I can get you up and running within weeks rather than months or years, and probably save you a small fortune along the way. So I run both a live trading room and I run a coaching room, and I've got and if you look at my program, how comprehensive it is, there's 38 PowerPoints. Now the great news is you don't have to learn them all. It's just I've got a lot of different setups. You focus on only 2 or 3, that's all you need. By the way, you focus on what I call the easy money trades. That's right, there are trades I call easy money trades. All right traders, hope you enjoyed this, and I'll see you in one of my training rooms. Cheers.